today I'm going to be kind of recapping what we learned so far and also introducing myself properly. So, my name is Marcus, and I guess online people usually call me Agent, Who's Agent, and that's also the handle for my YouTube channel, Who's Agent. You can find me on Twitter under Who's Agent, but I am the host of the Quant Room series, and the purpose of the Quant Room series is to educate people on the systematic approach. On YouTube, at least, there's a lot of lack of information or detailed information on how to beat the market as a systematic trader. So what we want to do with the Quant Room is expose some systematic traders to you while also, I guess, educating you on many of the terms and how people are using like the metrics and the approach that they're taking to beat the market, like backtesting, proper ways to backtest, the data that they're using, and all different styles of, I guess, approaching systematic trading, whether it's through AI, automation, or manual to really beat the market in this mathematical approach, right? So that is the purpose of this series, to introduce it properly. So, as I said, my name is, well, I go by Agent online. My channel's Who's Agent. I learned trading from, well, I started in 2020, and then I had an exceptional year, and then I blew up at the end of the year and all this other stuff. Actually, I blew up in 2021. I lost like $20,000 in 2021, and that kind of shortened my growth from that 2020 period. But I'm sure many people have similar stories. I started off kind of like doing options, and then 2021 I was like doing the QMAGI trading style, the breakout trading style, in the per deep like EP style, and I was also following like Mark Minervini. I probably said all those names wrong, but that's kind of like the school that I kind of grew up in for trading. And that was like my approach, and I was in many of the discords, many of the chats. So that's why some people might know me, some people might not know me. If you're from that camp, in the QMAGI camp, or QMAGI Discord, I could say like a lot of people know me there. So pretty much to speed things up, I was in the QMAGI Discord for years. I was always like arguing or I was just trying to prove things correct or wrong that people would come in. People would come in and say crazy things like, oh, EPs need to be, a good EP is 10x in the first minute, the 10x the volume in the first minute. Or they would come in and say crazy things like that. And, I had actual data, so I was able to prove it wrong, stuff like that. And I was always doing studies and exposing them to the community. Like I would do like EP studies, breakout studies, historical studies of bubble periods, stuff like that, theme studies, like how long themes last. And I would always have like, I had like a bunch of documents of it and stuff like that. Matter of fact, so you can see database links. I had all these different studies done. This is not even all of them, but I did all these studies. This is like the hand studies I was doing at first, right? So I was kind of doing all these studies at first by hand. So these were my mean reversion database, blah, blah, blah. This one's not fully filled out. Oh, we can leave that. Oh no, we need to bring that. So, yep. Parabolic short database, right? And you can see like, this is where I'm looking. This is all the manual testing I was doing when I was like a discretionary trader, more or less cherry picking, but I was trying to be as systematic as possible. Oh, this one's not really cherry picking. This one definitely has like rules on it. But yeah, I did a bunch of stuff like this, and pretty much I would, I guess per se, what happened to this? Did someone delete this? Well, whatever. I don't know what's up with the EP database. Yeah, no. Yeah, I was doing all types of studies. Yeah, you see, I was writing down criteria. So, yeah, like this is kind of like my approach. I was just doing all the discretionary stuff, right? So this is what I was doing. So then a guy in the Discord came and say, like, no, you need to have this many samples. This study's not good because X, Y, and Z. And we went back and forth a little bit, but he kind of educated on me, like how to take a more systematic approach, how to be non-biased. So that's kind of how I got started to the systematic approach. And during that time, I was using Spikeet to kind of like pull historical data and just get information from it. I have a group, and we pretty much have tried to create multiple strategies to more or less beat the market, right? Like from a systematic approach, we're talking shorts, we're talking longs, we're talking EPs, we're talking gapper strategies, we're talking mean reversions, crypto futures. We have looked into many things to approach beating the market in a systematic way. So that's in general, that's who I am. That's what I've been doing for at least the last, I think, since 2022. So it's been over 3 years, and I had my group for we've been active for a while. So let's move forward. Let's move forward to the topic of the day, which is kind of summing up. I think I have 10 slides. Yeah, I have 10 slides on systematic trading. What I've learned, or what I think has been, I guess, reiterated through mostly everybody that has talked about systematic trading so far in the 6 episodes of the Quant Room. So let's get to that. All right. So the first thing is discretion versus systematic. There's no right answer to this. You can do either or. I guess what has been noted is discretionary feels very powerful in the short term, but it's very hard to be consistent with. This is why a lot of people went to systematic trading. They thought they can find more long-term compounding and growth through systematic trading. Many systematic traders, as I said, like myself and many of the ones we have talked to, are also hybrid. So don't feel bad about being hybrid, or if you're not fully systematic, I think it's okay. Someone did note that at the early stages, they thought it'd be better to be systematic at first and then, get hybrid once you learn more about the market after you traded so long and you have that experience. So that's something that I think a couple of people touched on, and I agree with that. And then if you can't explain what you're doing, you're not trading, you're gambling. That's just, it doesn't matter if you're systematic or discretionary. If you're doing random stuff, and you can't explain why, you're just gambling. The proper way to backtest. Your backtest, as Dave said, should be like your BS checker. You should use it as a wide lens to hone in on something that you might think, but you shouldn't just put in your bias to start your backtest with. Your backtest should lead you to your bias or to a different result. It should not just be, I guess, I'm honing in, I'm putting in these numbers, I'm testing for these numbers. It should be outside of the scope, and then you narrow it down to that and see if you have a positive skew. Your backtest should be over multiple regimes. This just means that your backtest should be over historical, different markets. So over a longer period of time, like 5, 10, 20 years, whatever it may be. And then it should be over multiple markets, 2020, 2022, 2025. 2025 has been drastic different with this terror stuff and the Trump being president and how the economy has kind of changed and some of these things. So these will be, I would say, like different regimes. We had AI markets, we had space markets, we had crypto markets in 2021. So these will be like different regimes. And obviously, if your strategy does well in all of them, then you can say it's robust, right? So, and simple rules beat the complex ones over time. And I would say also it's not just over time, but it can be instant too. Sometimes complex rules, when you take it to market, you realize you can't do that. Which I talked about my story about that before too, where we made an EP strategy pretty much and the rules were too complex and we couldn't even execute it. And we didn't know until we took it live 6 months later. The dangers is living Excel. This is exactly what I was just talking about. Analysis paralysis. That's what we had, where we was trying to perfect this EP strategy, trying to get the optimal amount of money out of it or profit ratio, whatever profit factor. And we spent a lot of time just looking into it, but we never took it live. So we had analysis paralysis. And what that leads to is our buzz can be hidden inside of our spreadsheet and we'll never know because we didn't take it live. So what you should be trying to do is you speed to your first trade. Even if your system's not perfect, you can perfect it later, but you should speed to the first trade to see if what you're doing actually works. That's the only way. Backtest is hypothetical. when you take it live, you'll figure out the errors and you'll figure out if something went wrong, if it doesn't work. Many traders have talked about doing this. All right. Using AI to develop your system. AI is a way to remove friction, which is just really, like, I guess, lack of willpower to do something or time or effort into doing something. But AI is still your responsibility. Like, you're not passing off the responsibility. You're passing off like that effort, that time. You're using AI to make things more efficient. So in a faster, efficient process means faster rejection of bad ideas. This is pretty simple to understand. As of right now, you are the creative person. You are the edge, right? AI is not finding your edge. You use your creative ideals and you use AI to kind of iterate over that. So it accelerates your growth of an ideal and testing of it. It should not be creating it as of right now. That's what we have gathered from most of the traders that have talked about it. I think Max is the only one who kind of had like a different approach. And even then, like he said he was feeding in his group, but he's letting AI kind of like dictate many things, but he's using like 4 different types of AIs to kind of back test everything and test against them. But regardless, he even said it's garbage in, garbage out. So you have to come up with something initially for it to kind of work off of. So how to build your system with automation. And this is mainly, Dave was the biggest person of automation, biggest component of automation. People feel different about automation in general. Some people don't think, automation is like the best way because it can obviously break your system or something can go wrong. They feel like they need to be there. But automation can remove emotional decision making, which is very good. I mean, this is just an edge in itself. If you've ever been tilted and traded, you understand. If you ever had a bad day or just been tired and traded, pretty much automation can keep your trading consistent. But the goal for at least most people is not zero involvement. Some people it is zero involvement, but I don't think that should be the goal currently. And from talking to people, once again, automation, just like AI, is not to hand off responsibilities completely. You still have to have some involvement as of right now to make sure things is right. So you can understand what's going on with your system. Take automation in steps. This is something that Dave talked about, and he actually had a very good podcast on it, talking about how I guess the ideal is that like automation has been implemented into this world step by step. First, we used to take you didn't use credit cards. Like you never that wasn't something we used to do, like digital payments, transfer and stuff like that. All that stuff happens instantly through automation, but it used to be dollar to dollar from person exchanging to person exchanging. And it took time over the years to really get that. Now, no one really carries dollars, at least here in the US. No one really carries money, like currency, like paper money. They carry like credit cards and wallets. And he kind of said, like, this is how you build out your system. You take it step by step as far as you want to take it, but you go step by step, not only to catch like the mistakes in the way and the bugs, but just as a general thing. That's how you want to approach it. Size for the journey. This is very important. I don't necessarily have this problem. This is for larger account people. This is something that many of the, I guess you can say, higher echelon traders have talked about, but you want to position size for your survival at a certain point when you feel like you have grown enough. Now, what is that point? I don't know. That's probably discretionary to each person, but position size is serving your survival. Early growth, like me, I'm still growing my account. You probably want to take more risks so you can grow that money faster without blowing up. So you need to still, have some type of restraint on the early risk. Don't obviously throw your whole account in, but maybe you'll take more risks if you have a $10 million account, maybe you only want to risk like 0.5 or 1% of your account on a short. But if you have a $10,000 account, maybe you risk, up to 2, 3, 4% of your account per trade or something like that. I don't know. But as you said, as it says, the later growth needs more restraint, right? So obviously Dan talked about this, safe trading habits. As you are reaching that point of retirement. The best systems can fail with bad sizing. This is, I don't think a lot of people realize this, but this makes sense, and there's actually math to prove this. So at some type of volatility level, I'm not even going to talk about the math, but yeah, just know that there's math that proves that systems can come inefficient with like oversizing, right? They could come, the results can get less. So if you think that you have the perfect system and sizing bigger is automatically going to equal more profits, that's not necessarily true. Surviving drawdowns, this is a big one. Every single trader, not only that we talked to on the podcast, but I think I've talked to that's been successful in general, you know, outside of podcasts, has went through a drawdown. So a drawdown is just part of the trading game. Like I don't think it's avoidable. Like it's proof that you're actually really trading. You're not just paper trading. Like it's part of the game. Confidence comes from running the numbers and live testing. So to survive a drawdown, you need to have confidence in your system. And this is how you build confidence in the system, at least systematically. You want to run the numbers and you want to take it live. Serious traders grow out of the drawdown, and serious traders grow from the drawdown. Every single trader that we have talked to on the podcast have mentioned that the drawdown has inspired them to not only build out more systems, but take it more serious, be more consistent, evolve their process, and really just like get to grinding and hustling and really putting in the work. This is what drawdowns have made them do. They never want to experience that pain again, so they worked their way out of it and they just grew from it. So, when to trust the system? When the system is in whatever the metrics that you have shown on paper when you ran the numbers, you probably don't want to turn off the system then. So I guess to reiterate, when to trust the system, we're saying like, when should we be like letting the system run? We believe in it and we're not like doubting it to the point we're about to turn it off. So yeah. Emotional shutdowns happen near the bottom. So this is not something that I have experienced personally, but this is what a lot of traders would say. When you really start to doubt and you're like emotional about your system, that's usually near the bottom, is what's been noted. Excuse me. Sound like I'm sick, but I shouldn't be sick. Multiple systematic strategies. This one's everyone talked about. You don't want to have this one system. No edge lasts forever. And diversification smooths equity curve. So this just means if you have multiple systems, maybe one system's doing bad in one regime, maybe that regime is let's say, I don't know, you have some trend trading strategy, and you know, when the SPY's down, the trend trading strategy is not doing good. But you have another strategy that I guess maybe take shorts on the top 500 companies or something like that. This should balance your equity curve out theoretically, right? So that's all the same. Like one system's doing bad, another system's doing good. Your drawdown of your actual portfolio level looks a lot different. Retire systems, don't kill them. This simply just means you want to track all your systems. And when you have a system that's doing bad or it didn't perform well, before you kill it off and just get rid of it, you should really just retire, put the system away, turn it off, and then keep watch of it, because many people have noted systems always come back at some point. Maybe it's 10 years later, but system can come back, and if you're keeping track of the system, you'll see that, or you might see that. And this is the final slide, transparency in the community, and this is what we are about. We want to put out this information so we all can learn from it, but public results enforce honesty. So as people know, there's a lot of, I guess we call them gurus, which is fake gurus in this community of trading. And really, when you put out your public results, when you have like a kinphone, stuff like that, things of this manner, it adds like validity and people know that you're telling the truth. So, and when you have that, people can also test your ideals and prove you wrong and tell you different stuff, and it can help you grow. So not only can losses teach you more than wins, but like sharing your losses, someone can tell you why you might have lost in this situation, what you could do better, which helps you learn. And obviously, working in a community can accelerate your growth. So that's it. If you enjoyed this and you liked it, tune into the Quant Room. Like I said, there's a lot of information online about systematic trading, but it's always buried deep in some type of form, some type of quant room that no one's really checking, or only, it's not as accessible as something that's on YouTube. And a lot of interviews on YouTube, for example, like the Chris Shucks interview, it's people just asking just basic questions around like trading and what he's doing. Like, okay, you back test, but they're not talking about how to back test. That's like what we're doing. We're really trying to dive deep into the edge of back testing, the details of it, how it's done, the metrics, the advanced metrics, and learn more so we can share it with you guys and we can get some of this information that's buried into these forums into a video platform. So that's going to be it. As always, like, comment, subscribe, and leave comments on who you want us to talk to. Peace.